In this video, I'm going to explain what liquidity is, how to identify liquidity zone, how to avoid become a liquidity, and how you can use liquidity through this strategy to your advantage. Now, the big question is, what is liquidity? Liquidity simply refers to money. They are money that people use in entering into the trades. For example, places where you put your stop losses, your buy orders, and your sell orders. When you place trades, when you set orders in the market, at that particular point where you place those particular orders, that's where your money is. And at those places where you put your stop losses, where your money is. So those places are what we call liquidity zones. And those are the places that market makers, big people that has a lot of money that can manipulate the market, those are those points they target. All they do is that they use your money to push in their transactions. So the idea is very simple. When people with large orders want to go into the market, the there's not enough liquidity to get into the market. So all they do is to gather more liquidity to enter the market. So they do that by manipulating the market and making you lose your money. So that is basically what liquidity is. Liquidity simply means monies. And where are these money resting? They are resting at places where people put their stop losses, buy orders, limit orders, and all those places. So the idea is very simple. You just have to look for those places where normally retail traders will put their stop losses or their buy orders. For example, if, for example, you look at this particular chart, right, you predict that this particular chart wants this particular price, this BTC wants to go down, and you want to trade, you want to short the coin. Most probably, you'll be putting your, let's say, your stop loss at this particular place or at this particular place because this was the highest point you went to. Let's say you put your stop loss either at this place and at this place. So this particular place is where liquidity is because you're not the only one that will be looking to short this particular market, and you're not the only one that will be putting your stop loss at this particular place. So what those big financial institutes will do, will simply manipulate the market. Though the price of this coin is going to go down, what you do is first simply do what? They first come back, sweep your liquidity, get sweep liquidity, and then before the coin or the price will move downward. That's what simple liquidity graph is. All they do is to clear up your liquidity, make you lose your money, trigger your stop losses before the market moves in the direction that it's intended to do. So I can use spot liquidity zone. Spot liquidity zone is very easy. You just have to spot those normal places in the chart where retail traders will often put their stop loss. For example, swing highs and swing lows. So if this is an bullish chart, okay, you get, so we have something like this in a bullish chart, something like this. So this particular point at this region, your swing highs and your swing lows, um, liquidity are wasted at these particular places because these points have acted as previous support and resistance. So, as a retail trader, if you want to get to this particular market, so if you want to long, you'll be looking to do, you'll be looking for price to come back to this particular region again for you to place your order, probably buy order, you get, so that when price come to this place, you throw a trigger and then when the price goes up, you make profit. And most likely your stop loss will be below this particular region. Let's say your stop loss will be around this particular region. So at this particular place, and liquidity resting in this place, and liquidity resting in this particular place too. For those people that want to sell the market, as in a market, as much as you are buying, people also want you to sell or people want to short. So there'll be stop losses resting at this particular place, which is swing low. There'll be stop losses resting at this particular place, which is swing high. So what market makers will do is simply do what? You simply do what? Come back, sweep your liquidity or trigger your stop loss at this particular place, and also trigger the stop loss resting at this particular place before market goes either the upward direction, the downward direction. So where does liquidity well? Liquidity is seen at areas of swing highs and swing low. Other places where you get to see liquidity are places of equal highs and equal lows. We all know that when we see equal highs or equal lows, it simply tells that okay, market wants to go up. For example, we see equal close yet, you know that okay, there is a strong buying momentum coming in. The next time price gets back to this particular place, you're looking to buy. You get so those market makers already know that this particular place are where retail traders are looking into to do what to buy. So all they need to do is simply manipulate the market and figure your stop losses before market moves in the right direction. So other places where you can see liquidity are zones of supply, sorry, support and resistance, trade line. For example, if this is a let's do something like this. Get so those people join making use of trade lines to normally they will do or they will draw trade lines and we hoping that on the next time price come out of this particular trade line, they will look to buy. And those people trading trade line break and wait test. For example, wait for trade line to break this particular for price to break this particular trade line. We tested it before going back. You get these people their stop losses will stay around this particular region, below this trend line and above this particular trend line. So market uh makers will do what? Manipulate the market, trigger your stop losses and your trade lines before market move in the right direction. So these are actually zones where your stop losses and your liquidity or your buy limit orders are resting. The next question is how can you use this to your advantage? How can you prevent you becoming liquidity? And that's what I'm going to talk next, man. So to use this to our advantage, all we need to do is simply spot zones of liquidity and then wait for market to clear those liquidity before we enter into the trade. I believe you have heard of smart money concept. The smart money traders who using those strategies, that's what they simply are doing. All they do is simply follow steps of big financial institutes, wait for those people to clear out liquidity before entering into it, entry to the market. For example, in this is just like a rough sketch. I'm going to show you guys, I'm going to take you guys to the chart and show you guys what I'm talking about. If, for example, you see this particular chart, you get, and probably you see at this particular video, you see this equal lows, right? All you need to do is simply wait for what for price to come back and sweep this liquidity that's just here. Once price sweep this liquidity, then before you enter, you once price sweep the liquidity, all you need to do is to go to the lower time frame and look for a change of character before you can enter into the market in the right market direction. Do not wait for price to sweep this liquidity that is basically above this particular region, you become the liquidity. Now I'm going to take you guys to the chart and show you guys some example. Before I do so, if you are finding it helpful, please do it to like this video. Please like the video, and if you are new here, subscribe and turn on the bell icon. So guys, this is an example that I want to show you right now. As you guys can see, this is actually kind of an uptrend right at this particular place. You are with me that this particular video acted like kind of a support zone. For example, if I draw a trailer in this video, see that was like a support zone at this particular region. I don't know if you can see at this particular region, which means that when price go to this place, it bounces off, just as again, it bounces off as a retail trader that trade line or even support a resistance. If you're looking to buy again when price get to this particular place. But what can we see? Next time price came to this particular region, what happened? Price breakthrough Price broke through and do what? Trigger our stop losses before price went down. You can see. So this is actually a clear example. If I go through the chart, I'm going to see a lot of example where price do what? Trigger stop losses, sweep liquidity before going into the right direction. Example of liquidity sweep is this particular region, as you can see at this place. Even though price wants to go up, but it has to go down, sweep liquidity. This particular week right here actually liquidity sweep. You have to sweep liquidity that is below for price how to go up. You can see these are what we are talking about. So the next time you'll be trading, you should look out for this. I already made a detailed video. In that video, I explained a lot of liquidity zones and how to spot that particular liquidity zones. the market. As you can see, this particular long weekly is also a liquidity sweep. You get just that I don't have the full picture, but this is a liquidity sweep. Market wants to go down. Now, you all know that this is actually a supply zone. As you can see, this was the highest place that price goes to again. Normally, everybody looking to see, but what happened? This particular long week had to do was sweep the liquidity, took out the stop losses that was above this particular region before price finally do what come back again and move to the downward side. So basically, these large candles are caused by what big financial institutes, and you can see there are imbalances in between them. So these are how these particular people do what do trigger the market and make you lose your money. I highly recommend you watch my video. In this video that I'm going to show you, that particular video, I actually took trades from beginning to the end, did a full analysis, and I can easily spot liquidity zones like practical aspect of it. So I recommend you watch that particular video. If you find the video helpful, please do to like, subscribe, turn the bell icon. I'll see you in my next video. Peace out.